Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. With the Australian dollar finishing the week on a softer note, still remains vulnerable to the downside with the target seen around 69.35.45, with the dollar slightly stronger on safe haven demand and US non-farm payrolls unexpectedly slowed by a loss of 92,000 jobs in February versus expectations of a 59,000 gain, while unemployment edged to 4.4% from 4.3%, and the prior reading was revised to 126,000. Wage pressure remained firm with hourly earnings rising by 0.4% month on month and 3.8% year on year, complicating the Federal Reserve policy outlook. In other data, US retail sales also slipped by 0.2% in January, signaling softer consumer demand, though the US dollar found some safe haven demand by rising Middle East tension after President Trump warned there would be no deal with Iran except unconditional surrender. Meanwhile, the Australian dollar continues to draw support from expectations that the Reserve Bank of Australia could tighten policy further, with markets pricing in around 30% chance of a 25 basis point rate hike on March the 17th. Along with that, fully priced in for May. With the technicals remaining somewhat fragile, let's see if we continue to see this bearish price action reach its objective. The euro also remains heavy and looking to this target around 114.80. I feel that there may be demand there, as we did see at least twice when we were here back in 2025 in October. Let's see if that occurs. Nevertheless, overall, we still could see the weaker play due to the recent safe haven demand for the US dollar. Overall, let's see if the market can bounce. The dollar yen also surges into 158, and I'm a little bit cautious here due to the recent bull traps that we've seen and the significant down test. So I'll be neutral here and keeping an eye and waiting for this trap and maybe eventually seeing a move back to the 155, 156. Sterling also weaker and weighing on the support level seen at 132.55. A break there, well, the market could actually drop towards this region of 131, given the fact the technicals are still heavy. Gold, well, the market's whipsawed and softer, with the technicals breaking down, looks towards a target of 5,500 and the trend line seen around 4,800 to 4,840. In light of the pattern, I feel the market may respond from there, as we would be oversold, and see if we can get a bounce. Wrapping up with oil, on a monthly chart, you can see we're back to the highs last witnessed in 2022. And let's see how we play out. I am neutral, and due to the risk, this market still remains unpredictable. So for those trading, I do heed high caution. That's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new week.